what's the issue here? Consumers, it seems, are spending a little bit less. We do know that home sales are down a bit, which is the immediate effect of raising interest rates because mortgage rates go up. But this is kind of what we wanted to happen, right? We wanted inflation to cool everything down a little bit. Now things cool down a little bit, and a whole bunch of investors are freaked out.
Well, you got to put into some context, Ali. I mean, stock prices go up, they go down, they go all around. But if you take a step back, they've not really gone anywhere in the past 6 to 7 months. They fell sharply at the beginning of the year when interest rates rose, which you would expect. But since May, June, they've really gone nowhere. So I don't read too much into the the day-to-day movements in the stock market. You're right about retail sales. They were weaker than expected, but that comes off a very strong October. People are out spending a lot, and it just could be timing. So you have to consider that people are shifting what they're spending their money on, right? So in the teeth of the pandemic, we were stuck at home and we were buying stuff, apparel, furniture, consumer electronics, that kind of thing. Now that the pandemic is behind us and we're out and about, we're traveling, we're going to restaurants. So these numbers you saw on Thursday reflect the spending on stuff, not the spending on all these other services that we're now spending our money on. So I think if you take it all together, I came away from the week thinking this is a pretty good week. Inflation is headed in the right direction. It's still very high, painfully high, headed in the right direction. And growth, consumers hanging tough, but doing their part and just enough to keep us out of recession.
So, Mark, you've been talking to regular folks who don't follow economics for many, many years. You probably explain this better than anyone else. There may be a recession next year. The Fed really wants to break the back of inflation before there is a recession, before there's a slowing of growth, because there's a problem. If you get to a situation where your economy is shrinking, but your prices are rising, there's no real known way to get out of that.
Yeah, I think the difficulty here is inflation is high. The Fed needs to get it down, and they're raising interest rates. So they need to thread a needle. They need to raise rates high enough, fast enough to slow things down, quell the price pressures, get inflation back in, but not too high, too fast to undermine consumer spending, undermine the housing market to a degree that, we go into recession. And pulling that off is going to be tricky. But, my sense is the underlying fundamentals of the economy are pretty good. They're strong. And we have a fighting chance of getting through this without an economic downturn. We need a little bit of luck. Nothing else. You saw Treasury Secretary Yellen talk about no shocks. That means nothing else can go wrong. So we need a little bit of luck. And we need some reasonably deft policy making from the Federal Reserve, and we can navigate through
and shocks look like what? A massive oil spike, price spike, or something like what would a shock be?
Yeah, they're the known unknowns. I mean, we're trying to gauge what Putin's going to do in Russia. Who knows? He could go down a lot of different dark paths. He could go down that really disrupt things and cause oil prices to go up again. And nothing undermines the collective psyche than having to pay $5 for a gallon of gasoline. So if that happens, then we are going into recession. And then, of course, there are the unknown unknowns. We just don't know. They can come out of left field. I'll say this, though. We've been pretty unlucky over the last few years with the pandemic and the Russian invasion. I think we're due here with a little bit of luck.
For something good. So a recession is a psychological thing. It's not a mathematical thing, right? It's people thinking. We're starting to see some layoffs and stuff like that. We saw this in the midterms. People talked up inflation in a way that caused it to be a political matter, even though if you study inflation, you realize it's global. Inflation's higher in about 100 countries than it is in the United States. We're not even close to being the highest among peer countries. But people start to believe these notions. Does the same thing happen with a recession if you talk enough about it?
I worry about that. I've been a professional economist for more than 30 years. I've never seen this kind of deep, dark, broad-based pessimism from the CEO. Jamie Dimon, the CEO of J.P. Morgan, talking about economic hurricanes to my next door neighbor, thinking we're going into recession. I've just not seen anything like it. And you're right. At the end of the day, a recession is a loss of faith. It's a loss of faith by consumers that they're not going to hold on to their job and they stop spending, a loss of faith by business people that they're not going to be able to sell whatever it is they produce, and they start laying off workers, and you get into this kind of self-reinforcing negative cycle. And the collective psyche is pretty fragile. We could talk ourselves into recession. very possible, particularly if, you get that shock. And one more loud, this metaphor I have in my mind is we all got our hand on the economic bunker door, and one more loud sound, that shock, that
you go
we
inside.
go into the bunker, and that's a recession.